Hello everyone, welcome to my channel The Takeoff. This I have created only for study purpose so that students who could not attend classes can watch this video and get updated. As already discussed in the last video, the definition of capital asset, that is, it includes property of any kind held by SSC whether or not for the business purpose. It includes all kind of property, movable, immovable, tangible, intangible, fixed or circulating. That is, anything which create value is a capital asset. We have already discussed that what it excludes and includes in it. Now further, we will move on to the computation of capital gain or loss. The meaning of capital gain. Capital gain is any profit or gain arising from the transfer of capital asset is taxable under the head capital gain in the previous year in which transfer has taken place. That is, capital gain arises when an capital asset is sold above its purchasing price. The difference will be a capital gain. Now we will move on to its computation, that how capital gain is computed. Before that, there are conditions for the gain to be charged under capital gain, that are capital gain can only be charged on the sale of capital asset. Next, the capital asset should be transferred by an SSC. If a third person transferred, then capital gain will not arise. Next, such transfer should take place during the previous year. Next, the profit or gain should arise as the result of transfer. That means transfer is mandatory. Only on transfer of a capital asset, capital gain or loss can arise. Such profit or gain should not be exempted from tax under section 54, 54B, 54D and so on. These sections we will learn in the next video. So now the calculation of long-term capital gain. This is the formula, that is total sale price, full value of consideration less expense related to sale less index cost of purchase less index cost of improvement, that will come gross long-term capital gain, and then we will deduct exemption under 54 series, that is 54 EC, 54E, 54F and so on, and that what comes will be a net long-term capital gain. This is the formula for long-term and short-term capital gain. We can calculate by this method, deducting all the expenses and index cost of acquisition. But while calculating short-term capital gain arises when the asset is sold within a year of purchase. So when the short-term capital asset is sold, then the index cost of acquisition will not be there. Only cost of acquisition and cost of improvement. Indexation is done only in case of long-term capital asset. So in short term, full value of consideration minus cost of acquisition minus cost of improvement minus expenditure incurred, what comes will be a short-term capital gain. Now what is index cost of acquisition? Index cost of acquisition, we can see the formula is cost of acquisition, means purchase cost multiplied by CII, that is cost inflation index. That is a chart of index I will provide you, in which there is an indexation cost given for each and every year starting from 2001. So CII of the year in which asset is being transferred divided by CII of the year in which asset was acquired, or CII of 2001 or 2, whichever is later. Same as index cost of improvement, formula is cost of improvement into CII of the year in which asset is transferred divided by CII of the year in which expense of improving the asset were incurred. Now the period of holding, how we will calculate period of holding. This is the chart which will provide you the bifurcation of long-term and short-term capital asset, whether the asset is calculated in short-term category or long-term category. When the security, this is talking about listed securities or unit of equity, UTI, zero coupon bond, the short-term capital asset is held for less than 12 months. If less than 12 months capital asset is held, then it is short term, and more than 12 months, then long term. For unlisted share, land building, or both, period of holding is 24 months. That is, beyond 24 months, it will be a long term. And for debt of unit oriented fund, unlisted shares, or capital asset, other capital asset, period of holding is 36 months. That is, beyond 36 months, it will be under a long term category. So that's all for today. For the next session, I will be discussing further the sections of 54 series. Thank you.